Welcome back to The Making Of, hosted by Jack Pitts, where we talk with business owners and operators about the experiences that shape how they build and lead. Today, I'm joined by Robbie Ferman, managing partner and co-founder of Sollevare Group, a Manhattan-based real estate investment firm focused on multifamily and mixed-use properties with a strong emphasis on Brooklyn's brownstone neighborhoods. Robbie began his career at Marcus & Millichap as a broker, later moving into Newmark before making the leap from brokerage and private capital into starting his own real estate private equity firm. In our conversation, we talk about that transition, building long-term relationships in New York's real estate market, and what it really takes to compete in New York City. Let's get into it. Hey Robbie, well thanks so much for having me in the headquarters. Really appreciate it.
Absolutely, you're one of our first guests, so
Love it. I love the natural light and everything. Makes the long hours awesome. So.
Exactly.
Yeah. Well, really appreciate you taking the time. Obviously, I've kind of given the listeners a little background on your accomplishments and your background, but would love to kind of hear it from yourself. You know, where you grew up. Obviously, now you're doing real estate, how you kind of got an interest in that. I know you went to Syracuse as well, so kind of your decision making and your upbringing would be super helpful for the audience.
Absolutely. And appreciate you coming to the office. We were connected through my girlfriend, who's at Harvard Business School. Her younger brother is a good friend of yours.
Yep.
And I've heard great things, so appreciate you having me on the podcast.
Yeah, was like I really admire just, like what I really want to tell the audience today is like, you were doing the corporate world for what, about 5 years, give or take?
Yeah.
And now, starting on your own is, scary after you're making probably great money, working for a corporation. So that's why I'm super excited for our audience today because, that's a path I hope to go on eventually. But just interested in hearing what you learned, in the corporate world and when you really realize like, hey, this is my time to take my shot and, go all in. So
cool.
Yeah.
Well, yeah, candidly, I grew up in Westchester, New York. I always knew I wanted to start my own company at some point in my life.
Mm-hmm.
I always thought it would be in some form of real estate. My dad does residential real estate, which I always thought was interesting, and the deal-making side of the business I always resonated with a lot, but I wanted to do something a little bit more stimulating than just like flipping residential houses. So I have always been good with numbers and wanted to get into the commercial side of things, which is a little bit more number-oriented and underwriting-oriented. So I went to Syracuse University undergrad, took finance classes, entrepreneurship classes, and I wouldn't say that much actually translated into my first job, which I guess I'll go into how I got my first job.
Yeah, no, that's great. And I guess, so you're doing residential, and I know you kind of graduated right before COVID. I know you interned at the New York Stock Exchange as well. Did you ever think about doing trading, or was it always like real estate?
I would have probably gotten or taken the highest paying job I possibly could have gotten out of college.
Yeah.
I went to a non-target school, so I always felt like I had a bit of a chip on my shoulder and had to work harder than anyone else once I graduated from school to prove that I belonged in the same room as a lot of the people who did go to target schools and were super accomplished prior to graduating from college.
Yeah.
But yeah, I started doing whatever I could, very similar to what you're doing now, of like getting in front of whoever would speak to me and just trying to expand my network as much as possible to get a good paying job out of college. And I ended up landing on 2 different jobs coming out of school after a ton of grinding, a ton of interviews, a ton of getting rejected. Actually, there's this one company I interviewed for called Delos, which was like a pretty cool, exciting, like sustainable real estate company. I thought it would be a really good fit because I'm pretty passionate about like health and the environment. And I remember just working for weeks to prepare for those interviews. And the first interview, they told me it was going to be a behavioral interview, and it wasn't. And so I just was so unprepared for it, and I didn't end up getting that job. I was incredibly disappointed. But a lot of failures before I landed on my first two jobs, and I got a job offer from JLL working in Stamford, Connecticut to be an analyst, and I got a job offer from Marcus and Millichap to make $0 to become a broker in New York City. And fortunately, I was in a position where my parents were willing to support me, and I promised them I would make it back to them 10 times if they supported me for the first year of potentially making no money and going to Marcus. And I thought Marcus would be the best route forward to getting to what I'm doing now, which is having started my own real estate, like private investment company.
Yeah. No, I think that's super interesting, especially given, you probably had a $85,000, $90,000 paying job at JLL.
That's exactly what it was, yeah.
And you're like, hey, screw this, I want to grind. And I knew you started in 2019 there, and then kind of COVID happened. Like, how did that, you're becoming an adult now, living in the city on your own, like, how did you navigate that while you're also, working your ass off, like, proving to yourself and your parents, like, I know you're supporting me, but I'm gonna, give it back to you 10 times more. Like, how did you even go about, like, getting that work ethic and, I guess, like, finding mentors at Marcus? Like, that's something I'm trying to find as I'm, just navigating the corporate world and where I want to be in the future.
Yeah, good question. I guess a lot to unpack. I would say, just to finish up my thought from before, the reason I decided to go with Marcus is I wanted to be as close to transactions as I possibly could be. I always heard, like, coming out of college, your first couple jobs is to learn as much as possible, and I took that to heart. And so I thought that Marcus would be the most conducive environment to learning the business and being like, it's a meritocracy. So you're really just thrown into the fire, and whatever business you can kick up, you can pretty much run on your own, which I think for me personally is the fastest way that I can learn, is just doing it myself. Mm-hmm. And so being at Marcus and being thrown into the fire, although I didn't really know what I was talking about or doing, was the best course of action to getting to where I wanted to be, so that I could just learn the business as quick as possible. So that was kind of my thought process for picking Marcus, being close to the transactions, understanding, because I really didn't know, like, why people bought real estate, why people invest in real estate, like how people made money doing it, and what made a good investment. And taking the job at Marcus, I knew I'd be meeting all the most savvy the buyers in New York City who do this professionally, and I could learn from them. So that was, like, my thought process into going into Marcus. And then I know you asked a bunch of other questions.
Yeah.
I guess, where did all that stem from? It was really this chip on my shoulder. I always have had this, like, inner confidence that I could do what anyone else can do, mm-hmm. but I never felt like I worked hard enough in high school or in college and proved it, because candidly, like, my thought process is it didn't really matter until you start working. And right or wrong, I felt like I wanted to save as much gas in the tank for when I started working. And I think that's an excuse a lot of people make who just want to float and coast through life, but I was ready to go. So, like, once I graduated from college, I graduated actually in 2020, so I started during COVID.
Okay.
And it was a great time to start, because I could get an apartment for half the price that apartments were going for the previous year, so my cost of living was super cheap. I think I was paying like $1,200 to be in a great 2-bedroom with a roommate in Gramercy, which was, like, unbelievable. Didn't really have any other costs, and nothing was happening in COVID, so all I did was work, and all I did is want to learn how commercial real estate happened in New York City.
Awesome. That's great. And I guess, given the city with, like, COVID and everything, were you able to, like, obviously I know you worked primarily in, like, downtown Brooklyn, Cobble Hill area at Marcus and Millichap, but, like, were you able to, like, go out and meet those tenants and hot knock and, like, develop those relationships? Like, how did you actually learn during COVID? Because, like, I was remote a little bit, and it's hard learning, but I'm not sure, obviously you're in the city, if you're able to, go out and meet people and, pound the pavement.
Yeah. During COVID, a lot of people weren't doing like physical tours, but I was pretty fortunate. I had a boss and a team that was in the office every single day and who expected you to be in the office every single day, even though technically and legally like they couldn't do that. That was the expectation, and that's what I wanted. And especially like COVID was a pretty lonely time, so it's nice to have the camaraderie of being in an office with people and like just there's no better way to learn than to learn through osmosis of the people around you who just know more than you. So I felt that way deeply, and I wanted to be in the office and in the action. And I mean, I got pretty lucky. Like I started in downtown Brooklyn, Cobble Hill, Carroll Gardens. It was between that market or Bushwick, and I think the person who hired me just had a little more faith that I would be more cut out to work in those like higher end markets, and so they put me in those markets, and it was kind of it was lucky for me. And so yeah, that's kind of how I got my start.
Cool. That's awesome, and I guess we'd love to hear. I know you closed over 20 transactions in your 4 years there. Just like, how did you go about finding a mentor? Like obviously at Marcus, I know you said you had someone that kind of like believed in you, but like just navigating like, hey, closing your first transaction, getting the ball rolling with like transactions and figuring out how to work and operate, because it's all pretty foreign to you, and people who just start their new job as well. So we'd love to hear a little bit of that.
So I'll tell you a story. I started at Marcus, and I told myself I think it takes 2 years to really learn a business, and no matter what, I'm not going to quit, and I'm going to work as hard as I can for 2 years. It's like if I hate it after 2 years and I'm not making any money and I'm not doing anything, then I'm allowed to quit, but I'm not allowed to quit before 2 years. So that was my mentality going into it, and I hated my first year. First year sucked. It was like I made $9,000 in a full year of work. I was working harder than anyone else that I knew, and all I was doing all day was stuff I hated doing, like a lot of cold calling, a lot of prospecting, a lot of like me not knowing what I'm talking about, and I don't sound very good, honestly, when I don't know what I'm talking about. And so all those things combined was like, hated getting up in the morning, but I did it, and I did it by staying disciplined in like my routine, which is very important to me. So like getting up very early, eating a healthy breakfast, and working out every single day to get your mind right for what will then be a tough day. And then also doing like little challenges for myself always helped me and held me accountable to do the things that I needed to do, which I can get into more. But I can also go into like my first deal story if you'd like to.
Yeah, I mean, whatever you want. Like, this is your episode, like whatever you think's interesting. But I would love a little on just like the discipline, especially for people who are remote or just like starting their career, because it's like, it's such a big change. Like I just moved to New York City, I'm going into office starting on Tuesday. Like, how do you get that discipline? And, like you said, it's going to suck for a year, but you wouldn't be here without, grinding your ass off for those 3 years plus at Marcus as well. So,
yeah, I think the thing that like people who started to or do know what they're talking about don't tell you is that everyone in the beginning has no idea what they're doing. And even people who seem to be very accomplished still, I think, have no idea what they're doing. So I really had no idea what I was doing, and that was like that was scary to have no idea like what I was talking about or what I was doing, and then you kind of just start to learn and pick things up as you go. On the discipline front, yeah, I think I'm a pretty disciplined person in general, and there's a great book that I read. It's called Atomic Habits. It's the all-time best book to stay disciplined. Have you read it?
Yeah, I've read it. It's great.
Yeah. So I took a lot of those things to heart. I started listening to a million podcasts and listened to all the legendary New York City real estate developers and owners and how they got there. And the scary thing too is after working for a year and like working as hard as I did and not making any money, you're like, is this even real? Like, can you even make money doing this? Like, is this like some type of scam that I'm in? Which is, which you get past once you actually start to make money. But a quote that's always resonated with me from that book is, if you take an ice cube and you put it in a room that's 25 degrees, nothing's going to happen. You raise the temperature a degree, nothing's going to happen. You raise the temperature a degree, nothing's going to happen. The only time something happens is when you go from 32 to 33 degrees, and then the ice cube starts to melt. But the amount of energy that went in from making the temperature 26 to 27 degrees is no different than the amount of energy that went into making it from 32 to 33 degrees. And so that was literally in the back of my head the whole time I was making no money at Marcus. And I was like, the compounded effects of my efforts will eventually lead to that ice cube melting and me making money. Yeah. And that's what happened in my, like, halfway through my second year. I think I made like $70,000 one month, and then the following month I made like $80,000, and then the next month I made like $40,000, and it was the compounded efforts of the previous year. It wasn't what I had done in that month to make the money. And that's when it kind of all like was like, okay, everything I've believed, everything I've read, everything I've listened to, everything that I've heard is true, and it just is about compounding those small efforts on a daily basis to get there.
Yeah, definitely. That's super cool, and it's crazy to think, like you said, you made $9,000 your first year, and you still stuck it out, and that's just kudos to you on the grind, because a lot of people, it's like, hey, screw it, I'm going to JLL to get that nice paycheck. My friends are making a lot of money right now, but just kind of seeing that, hey, this is my goal on the horizon, and I'm gonna stick true to that is super awesome. And would love to hear kind of like just let's say year 2 or 3 at Marcus, like when you get the ball rolling. Obviously, I know you ended up going to Newmark. Like, kind of would love to hear just like when you're kind of in the groove of things at Marcus. Did you have a plan in, hey, I'm going to Newmark after, or was it kind of just like I'm grooving here, I'm doing well? Like, how you thought about that would be super helpful.
Yeah, so ball started rolling in my second year. I will say it was very helpful to have the mentorship that I had. This guy, Mike Salvatico, taught me the business like in and out. And the other guy who ran the team, Sean Riney, is one of the best real estate minds to date that I've seen. And just kind of learning from those guys for the first 2 years was just unbelievable. And they just knew mountains more than I did. And again, through the osmosis of being around them and just hearing them pitch deals and like talk about deals and think about how buyers can create value in buildings was incredibly helpful to building up confidence in my skill set and what I knew. And so that confidence, I think, started reflecting in me pitching business. And the confidence also comes from the hard work that you do yourself, and that just builds over time. And I was obsessed with learning, so all I was doing was like reading and listening to podcasts and understanding like how real estate worked. And every time I went on a tour to tour a buyer, even if that tour was going to make no money for me, it was something I wanted to do because I could learn the way that buyer who knew more than me looked at the real estate. And every buyer kind of has a different perspective, which is super interesting to learn. So I would say, again, I keep using this word compounded, but it's just so crazy how vast the compounded efforts and like the compounded decision making that people make on a daily basis changes over time. And the first year or two, there's very little difference, there's very little spread, but that small compounded effort over time creates such a wide arbitrage, especially once you start to get to like my age now.
Mm-hmm. Yeah, no, that's great. And something that I think that's similar to this is just like compound interest, with like investments.
It's the same thing. Compound learning.
Yeah, exactly. Like 1% better every day. Like, and that's what I've been really trying to like figure out is like all my friends, they're on like TikTok and Instagram, which, I'm on Instagram, but like I'm trying to get like, hey, when everyone's on their phone on the subway, I want to be reading, I want to be learning, because it's like, hey, you do that for 365 days times, 4 years, like you're going to have vast knowledge compared to other people. So
I always thought about that too with the hours that I worked. If I could work from 7 to 9 when most people got in at 9, and again at Marcus, you only make money from the amount of output that you're creating. And so like those 2 hours a day times 5 days a week or 6 days a week, because I work on Saturdays too and sometimes Sundays, times 52 weeks a year times 3 years, how much more have I worked than the next person who's next to me, who's also battling to like make commissions.
Yeah.
And it does over time. If you do it for 6 months, like yes, you can get a leg up, but it's not going to make that big of a difference. But if you do it for 2 years, 3 years, 5 years, 10 years in your career, I'm not even there yet.
Yeah.
Then think about how much of a difference that makes and how much further along you'll be.
Yeah, 100%. Yeah, that's super cool, and something that I'm trying to implement in my life, because like you said, those 3 years that you're working, you're actually working 5 of what an average person is working. So just put you light years ahead of them. And would love to hear, so obviously Marcus, great mentors, you end up joining Newmark.
So
how that kind of went about.
So Marcus, again, my goal was always to get to, I'm nowhere near where I want to be in the success of my company. I'm in this very starting stages of what we want to do, but I always wanted to get to the spot that I'm in right now, which is owning and operating my own investment real estate company. And so my mentality through Marcus was learn first and foremost, money second. Funny thing is, money comes when that's your focus and you're not transaction oriented. But because learning was always my priority, I got to the point at Marcus where I started to feel like I was running laps over not only our clients, because at Marcus you mostly are dealing with mom and pop clients, but also most of the people that I was working with. And so once my learning curve started to plateau a bit, I thought it was time for me to make a move. And coincidentally, I was poached by this guy, Dan O'Brien, who was at Cushman & Wakefield, along with one of the most well-known brokerage teams in the world, like the Adam Spies and Doug Harmon team, and they had just signed the biggest deal in the history of brokerage to go from Cushman & Wakefield to Newmark. I think it was $100 million Newmark paid them to go to Newmark, and they're the most institutional team, most sophisticated team in New York City. And so having given that opportunity and just kind of at an interesting time in my career where I thought my learning plateaued and I was I don't want to continue to work all these monotonous smaller transactions. I thought it would be a great pivot to my career to get to where I'm at now.
Awesome, that's great. And you were there for about a year and a quarter. I'd love to hear kind of the differences and what you learned and how it kind of set you up to do what you're doing now.
So Marcus is the Wild West. Newmark is much more corporate, just much more buttoned up and much more institutional in the way they do things. They underwrite deals the way institutional buyers underwrite deals. At Marcus, you just kind of slap together a quick underwriting and try to figure out the value of something. And so at Newmark, and also they work on much more larger and much more complicated transactions. And so there are different parts of the capital stack that I didn't know about, different forms of debt, pref equity, mezz, senior loan, and then because you're working on $100+ million deals, there's just a lot more that goes into it. And that was all new to me. And so I kind of started my learning curve over again, especially the first 6 months I was at Newmark. It was kind of a new world. Even though I felt like I knew more than most people in commercial real estate by the time I went to Newmark, there's a whole lot that I didn't know that I started to learn about.
Yeah, no, definitely. And so you're there a year and a half, you're learning, drinking out of a fire hydrant for the first 6 months. How did you like the experience there? Getting exposure to the more, buttoned up corporate world, was that kind of your speed, or did you like the Wild West? Obviously it's all personal preference, but
I think a bit of both. I definitely missed aspects of being at Marcus, but at the same time, I liked the credibility I had at Newmark, which was different than what I had at Marcus. And I like being able to have autonomy over my decision making, and I think I had a little bit more of that at Marcus, although they were pretty good about that at Newmark. There were some things though that I had to get used to at Newmark that I didn't have to do at Marcus, and like those were the major differences. But my overall experience at Newmark was unbelievable. I just learned so much, and my team was unbelievable. My mentor at Newmark and my boss, Dan O'Brien, was one of the smartest guys that I've ever met, and it was just such a great learning experience to learn from those guys, and it was absolutely the right move for my career.
Yeah, awesome, cool. So you're there a year and about a quarter. And then obviously you started Sollevare. I pronounced it wrong, I know it.
Pretty close. Maybe the closest I've heard. Sollevare, it's Italian.
Yeah. How you kind of went about that, and if you can explain to the audience, and obviously Jake, who's also your co-founder and managing partner. I heard the story on the other podcast, but just kind of for the audience, setting the stage for them there would be super helpful.
Sure. So about 6 months before I left Newmark, maybe a little bit longer before that, our two best friends from high school went to college together, and we had been sharing our ambitions with our friends, and they were like, you have to meet each other. And funny enough, we had met each other about a year and a half prior at some dinner party that we went to, but we didn't really get a chance to talk much. But yeah, we sat down for dinner, and the first thing that resonated with me, and I know that he feels similarly, is a very shared value system. So the way we look at the world in terms of what is most important to us, aka like how he was talking about his family, his twin brother, how he was dealing with different situations at work, and like New York City commercial real estate's a very cutthroat place, and there's a lot of gray area, and we both thought about that gray area the same way. So was number one, and it had taken me 5 years in the business to really find someone who I thought clicked with me well enough to like trust to be my partner. And then also the high school best friends goes a long way too, and like in having some trust. But we say all the time, we're very happy that we weren't friends before this started, even though he's one of my best friends now, because there's a lot that goes into starting a company, and a lot of different thought processes, and a lot of battling, and it's good because we're able to speak to each other so candidly, whereas maybe if we were friends beforehand we wouldn't have been able to.
Yeah, no, definitely. And I know that's always a really important thing, where it's like, you know, having a partner, but also like being a friend, but also like you are, you know, business partners at the end of the day. So I guess how'd you go about actually like, you know, forming the company and just being like, hey, you know, this is my time to actually like take my risk? And obviously you are investing in like mixed use residential commercial properties. Like how does one even, like you were a broker, like how do you go about like fundraising and all that stuff that, you know, we don't think about instead of actually doing transactions? Like kind of that back work would be super helpful.
So I think I'm one of the most decisive people that I've ever met, like maybe in the world. So the decision-making process for me was pretty easy. I'm 27 years old. I have very few expenses in my life. I want to do this eventually. I feel like I know about as much as most people do who do what I'm doing now. And so like, why not just start it now and figure it out? Like why spend another 3 years not building to where I want to be in a career that I ultimately don't want to be in?
Yeah.
Even if maybe my age could be a restricting factor in like raising money. But I knew I'd probably be better at sourcing deals than most other sponsors in the market. Mm-hmm. I knew that with Jake and Jake's skill set and expertise, which is extremely complementary to mine, and he's one of the best I've ever seen at underwriting deals. He's unbelievable in Excel. He's an unbelievable asset manager. He's unbelievably smart, such a great critical thinker. I knew that like together we would just be able to figure it out. And he was also sick of the corporate environment, sick of just like not working for yourself and like not having stuff on the line, which we both get a lot of energy from. And so we were just like, this is the time to do it. There wasn't really that much other thought into it. It's like, all right, how do we figure out how we're going to make this happen now? And I guess this is a good segue into how we came across our first deal.
Yeah.
So, yeah, there was a dentist who owned a building in Carroll Gardens. So Jake and I, there's also like, New York City is such a competitive landscape. It's hard to have a competitive advantage, and because of my background and my sourcing capabilities, especially in Brownstone, Brooklyn markets, one, a very natural fit to be in those markets. Two, as Jake and I started thinking about our thesis, we started doing a ton of research, and there's unbelievably compelling demographic trends in those markets as well, which we can go into later if we have time.
Yeah.
But this deal, this guy called me up. This is right as I'm leaving Newmark, and he's like, I don't want to list my building with a broker, and I want to sell it, and like, I want to sell it to you, essentially. And I had known this guy for 4 or 5 years. Coincidentally, too, another one of my closest friends from Syracuse, who was at Marcus with me, who ended up going off and doing something on his own too in the brokerage world, also had a great connection with this guy. So he called me and this guy started talking about me as a buyer too for this asset. So it was like the perfect combination, and we just started going out to dinner with the guy. And I think I take a very different approach, and my partner the same way, with people who are selling their real estate than most. I don't try to explain all the bad things about their asset. Like, I don't try to negotiate the best deal possible. I try to get to know them, understand why they're looking to sell, understand what they're looking for, understand how they think about the value of their building, and then have a productive conversation from there. And so that's what we took those opportunities at dinner to do. And I explained very thoroughly how we were going to make money and why it made sense for us to buy the building at this price, but also why he was getting a great value in the market today. And I think him hearing that, instead of everyone else trying to tell him why his building is worth less than what he wanted, was so different and differentiating that he trusted us to handle and figure out how to buy the building. We told him we had money, but we really didn't have any money to buy the building. And so but the deal was so good that we knew we'd figure out how to raise the money once we bought it.
Yeah.
So we signed a contract on it. It was extremely scary to sign the contract because it was a $2.4 million deal.
Wow.
I don't have $2.4 million, and then I guess we can go into what happened after that.
Yeah. Well, what happened after that? Like, how did you go about, like, figuring out, hey, I got to get $2.4 million to pay this guy. How do you do that?
So, rewind a little bit. Rewind about 4 years ago. I got a cold call. Shocking, because I do all the cold calling. But I got a cold call from this guy, and he was like, I want to buy some real estate. And I get these calls all the time. And when you're a broker, your time is your most valuable asset. And you can quickly see, because there's such a high barrier to entry and just so much nuance that you need to know about regulation in New York City, you can quickly see who's a probable buyer and who's not a probable buyer. This guy had no idea what he was talking about, but I took the time to meet him for lunch. No joke, under the assumption that maybe this guy could be a good investor for me one day when I start my own company.
Wow.
And so we got lunch, and I started teaching him about commercial real estate. And he and I came to this verbal agreement that if I find a deal that I really like, he'll just buy it with me. And so when I was at Marcus, found this off-market deal that I really liked. And I was like, I want to buy this. And he was like, let's do it. And we bought the building in the very beginning of 2023. He had another friend that corroborated that this was a pretty good deal, came into the deal with us, and that was the first ever real estate investment that I made.
Wow.
I invested almost all my money at the time. It was like $100,000 into this building, and even though I didn't operate it because I was working a full-time job as a broker, he found and liked my sourcing abilities and how much I knew about the market, and everything I said that would happen in that building came true. And so that guy was my first call when I found this building. So I did have a hunch that he'd be interested, and they were interested, and they were like, we'll do this deal with you if you really believe it's a good deal. And I walked them through why I thought it was a good deal, and they ended up investing 95% of the equity on the deal with us.
Wow.
And the hardest conversations we had were to explain why on this deal we needed to make fees and take carried interest or promote in the deal rather than before where we were all pari passu partners. And that was a whole other conversation.
Yeah, how was that? Like just navigating that conversation, because like you're trying to grow your own thing now rather than like be on the exact same level with him. Like,
so those guys are, even though they don't know real estate, extremely savvy businessmen.
Okay.
They're self-made and are the only people that I can say work as hard as Jake and I, other than the guys we just hired, Eric and Ethan.
yeah.
But these guys are just incredibly smart, and so they are capitalists at the end of the day. They understand that we quit our jobs where we were making more money than anyone else our age to pursue this, and that the value that we bring to a deal and in our sourcing abilities, and from what they've seen from us as people, and like they thought we'd be able to figure out how to handle the construction of the building and all that stuff. They just trusted us, although it wasn't the same level of fees and promotes that we get today on our deals. It was a start.
Yeah.
And it took a bunch of conversations. They were very nerve-wracking conversations. My partner and I planned for like days about what we were going to say, how we were going to phrase it. And it took negotiating, a lot of negotiating. They're tough negotiators. But we ended up getting it done like we do everything else.
Yeah, no, that's awesome. And just also having that relationship from 4 years ago, and frankly, having someone take a risk on you. Obviously, you didn't want to deal with them, but who's to say they would have done it again? So that's awesome that you got the first one under, and I know you've done, at least it said 5 all cash deals since, or have you done more? Like, we'd love to hear just kind of like got the first one underneath the belt. Obviously, you've been with your firm now, what's like 8 or 9 months? Is that right?
Yeah, I think we're going on about a year now.
Okay, about a year.
But yeah, the next couple deals, I lost my train of thought. I was going to talk about that previous deal one more time. Oh, this is what I was going to say. We knew going into that managing expectations is more important than the overall result of the building, which is, if anyone is listening to this podcast, like the biggest takeaway that I hope anyone would take from this is if you can make a, call it 15% return on a building in a year.
Yeah.
And someone thinks a 15% return is a great deal. Okay? If you tell them you're going to make a 17% return and you make a 15% return, think about the difference than if you tell them you're going to make a 13% return and you make them a 15% return. Net, same exact outcome. One way, the investor thinks that you did an amazing job. The other way, they don't think you did a good job. And so going into that transaction at 319 Court Street, which is the first deal that we ever bought, we knew we wanted to raise more money. And not only did we want to raise more money, we wanted them to invest in more deals with us. And so we purposely were very conservative with what we told them. We knew that we had their trust already, so they would likely invest with us regardless. And this is a fine balance and very hard to do because investors need to be excited enough about the returns on a deal to invest. But at the same time, you have to under-promise, over-deliver. And we did everything we said we were going to do to a T and better. We enhanced our renovation timelines further than what we expected. We underwrote very conservative rents that we'd likely be able to do better than. And those things happened. So even though nothing material happened on the building, we did what we said we were going to do, and that led us to being able to raise much more money for our following deals. Even though there's a lot of things in between that were quite difficult too.
Yeah, I can't imagine. Just like, I know you guys recently just released that investor portal like a month or so ago, and just like all the almost like admin stuff where, you want to do brokerage, find these deals, source them, get buyers and, get those off-market deals, but then you also have to, build a company. You just hired 2 people. Like, how has that process kind of been for you guys? Well, you have the deals you're going on, but you also have the, investors you have to deal with. Like, that seems like a lot of juggling, for someone who's 28.
It's a lot of juggling, a lot of parts of the business that I didn't know about and that I've been learning. Jake, my partner, has been a great help to some of those parts of the business, and then some of the parts of the business that he didn't know, I hope I've helped him learn too.
Yeah.
So key throughout this podcast is the learning aspect of all this, and learning by doing it and making some mistakes, but making sure you don't make those same mistakes twice. But yeah, I guess that's a good way to put it.
Yeah, cool. So I think we got maybe one or two more questions. Is that good for you?
Sure.
Cool. I guess we'd love to see, obviously, love what you guys are investing in. I listened to the other podcast, the Real Estate Roundtable, and just the demographics. So if you could kind of talk about how you guys found that. Obviously you worked in Brooklyn, but I guess I saw you at the DLA Piper, and you spoke to a bunch of people there. It could have been the wrong law firm, but I saw that.
Yeah, that's right. Yeah.
How you're going about doing that research, kind of being a thought leader in the space as well, because that's what investors want as well. And then where you see the business going in the future. Obviously more and more deals. But yeah, that's a loaded question. But yeah, would love to hear your thoughts there.
Got a lot of thoughts. So this may take more than a few minutes.
Yeah.
I'll try to be as concise as possible.
Yeah.
We have done research, again, through osmosis and talking to a lot of the smartest people. Fortunately for me, I was in the room and sat in meetings with a lot of the top institutions in New York City to understand how they thought about New York City real estate. And also just from learning over the past 5 years about how people have made money, how people have lost money. I would say probably the most valuable experience that I got throughout my 5 years in the brokerage world is I helped a lot of people transact on their real estate. So I knew who was losing money and who was making money. Mm-hmm. And that first-hand experience of understanding, okay, these are all the types of deals that people lost money, and trust me, there's a lot more than you think of people who lose money in New York City real estate, helped us inform our decision and our thesis of what we wanted to invest in. Mm-hmm. And so we wanted something that was pretty insulated from broader regulation. We wanted something that was very durable through bad times and good times. So there's something called a flight to quality, which is if you own the asset with the best rental units, even in bad times, you're going to be the first units to rent in the market. Even if they're renting below market, at least you're not losing your shirt with vacancies. So there's little things like this that we heavily considered before we decided on what we wanted to start investing in. And then from there, we started doing broader research on the market and these demographic trends, like I said, and we learned from other people who were looking to make investments into these markets, but we wanted to do things a little bit differently. And when I say differently, I mean people have bought buildings that were partially rent regulated. So a lot of New York City buildings look the same, but they have totally different buyers for them because of all these nuanced regulations I told you about. What we wanted to do differently is just be very concise and strategic in buying the same exact type of asset that one buyer would want to buy at the end of the day to make it easy. The mistake that we saw through our firsthand experience a lot of people made is they were buying buildings that look the same that are very different and have very different buyer pools at the end of the day.
Okay.
And so that was number 2. And then number 3 is these compelling demographic trends that I've talked a little bit about. We anticipate that due to these trends and these great tailwinds that are lifting us and bringing us to our investments into better places and hopefully will outperform everything that we've been underwriting to date, is millennial families and younger families want to be in these neighborhoods more than anywhere else, and we expect that demand to continue. And at the end of the day, it's all supply and demand, and the markets that we're buying in are the most supply constrained markets in probably the entire world.
Yeah.
No other real estate will ever be developed in those markets, and nothing can be built on top. It's just so supply constrained, so exclusive, and so in demand, and that is what drives value.
Yeah. No, awesome. That's super exciting, and I love those areas. They're just beautiful to walk around and raise a family, which wise people want to be there. And the last question now, would love to kind of just hear obviously you've got a lot of traction with your firm right now. Would love to see kind of your goals for the future. You're still super young, and yeah.
The goal is stay disciplined. it's very easy to get distracted by shiny objects and different opportunities. And now that our name is out there a little bit, we're seeing opportunities and cool things in like very sexy areas like the West Village and whatnot. And like, we have to stay super disciplined in what our investment strategy is, number one. Mm-hmm. And number two is that we turn down probably 50 opportunities for every one that we go after. Awesome. We got to continue doing that. Mm-hmm. So only buy the best stuff that we can.
Awesome. Yeah. No, that's great. And yeah, really appreciate you coming on, and really appreciate your insight.
Absolutely.
Cool.
Great
Thanks, Robbie.
Thanks so much for listening to this episode of The Making of. If you enjoyed this conversation, please like, share, and leave a 5-star review wherever you listen to podcasts. It really helps the show reach more people. As always, you can find this episode and past episodes wherever you listen, and we'll be back soon with another conversation about the experiences that shape how real businesses are built. Thanks again for listening, and hope to see you guys soon. Thanks.